Good morning, everybody. Good morning. Hope everybody can hear me. Hope everybody is all right. We made it through the week. Happy Friday to you. I am dragging with jet lag. Wild. Not as young as I used to be. So I'm not sure how long this stream will be today, this morning, Eastern European time. Actually, it's already into afternoon, but morning Central European and London time. Want to drill down a little bit more on the printing press today. See if they're actually printing money or not. All right, so remember, this is the economically comparable money supply to gold and to Bitcoin. All right, it's monetary base. It's the base monetary layer of the central banks. 45 currencies are in here. Pound sterling is here, only about $1 trillion worth. And then the rest, which is the most, as you see there, I'm just going by very round numbers, 6 trillion each, 5 trillion each, is the yuan, the yen, the euro, and the dollar. Good evening, sir. Good evening, Giblet. Hope you're well. Thanks for tuning in. Happy Friday to you. Happy hour, right? So let's leave the yuan aside. It's a pretty controlled currency, even though they're trying to back it up with gold. Thank you for the reposts, Satoto. Let's focus on these three today. All right, the dollar, the euro, and the yen. Pretty big monetary base for Japan. That always confuses people, but it's a top 5 economy in the world. Japan and Germany, major powerhouses coming out of World War II. Germany, of course, is 60% or something of this, which is the euro. So let's focus on these three money supplies for today. All right. And like I said, top 5 is 80%. But let's leave off the sterling and the yuan. All right, let's see if they're actually printing. This is monetary base for the Fed. Notice pre-global financial crisis, the vast majority of the monetary base was physical currency, cash, notes and coins. All right, so when they say the printing press, it was the vast majority of what the central bank did. Y2K scared a lot of people. Gary North, Nazi apologist, buried detractor. Of course, they would intervene. And when you intervene, all right, with this, which is the bank reserve portion, right, the digital portion, or in this time it was just a ledger entry that banks would know that they had, sort of a line of credit with the Fed, so to speak. Not really. It was more of free money. They started to do it during the Great Depression. Before the Great Depression, although there was the discount rate was historically low, and it's a separate analysis. They really started it after the Great Depression. They didn't really contribute to World War I. This chart doesn't go back that far, but it was more J.P. Morgan managing a lot of that war debt. It was not the Federal Reserve. But of course, as you see here, World War II, expansion of the debt, which we talked about yesterday. Also, you expand the money supply. But still, all through the Vietnam War, look at that. It's always going up, which is a small change problem. Right? People only goes down to 2 decimal points. But it's always going up. But regardless, the vast majority or the overwhelming majority, however you want to say it, to the tune of 80% was cash until here. All right. They did not let the system collapse, so we went to a completely new monetary epoch. QE1, 2, 3. Then they stopped printing. Even though a lot of Bitcoiners said they printed, they weren't printing. All the way till here. Then, and this was even before the pandemic, but this little jump right here, right there. They had a little repo spike in the market. Banks didn't want to give up their bank reserves. That is this. They didn't want to give them up. So the repo rate spiked. Fed came in, issued some more reserves, and then the economy was already on a bad footing here. It's an important point before the old pandemic, and then things went crazy. This does not include the reverse repo facility, all right, which again is base money for like non-banks, for money market funds, some hedge funds. That would take the Fed's balance sheet closer to 9, or 9 here, 7 here. But I'm leaving that off because it's not traditional monetary base item. Really, the monetary base is only these 2 things. And I got to reset this. I don't know why, but it's not showing. It's cash, physical currency, bank reserves. This is the printing press. So they've struggled to reduce it, and indeed, from the real hardcore reduction in the money supply, which occurred here after the Jackson Hole speech of 2022. Money supply in total went down, all right, 5.3 trillion, 5.4. Now it's 5.7. Good morning, Gio. All right, now let's look at ECB. This is the euro. All right, we got euros now on the left axis. Only back to 1998 when the euro started. Same deal. Before the GFC, everybody thought they were a genius, European Central Bank included. This little dip, they started accounting for the euro here, but the euro started officially here in 2002, I guess. Yeah, end of 2001, start of 2002. So they probably thought they were a little bit hot, and then traded in old money and all that. So this is just the transition into the euro. That's what this is. I don't know all the details, but really the EU 15, I think it was. Or was it even 15? No, it's probably less. 12. The original, Germany, France, Italy, Spain, Holland, Belgium, Finland, Luxembourg. That might be it. However, I just counted there. Started here, trading actual euro notes. So it's a little bit of a different picture than the Fed, right? But still, you get this. Here was the Greek crisis, excess liquidity coming in, and then again the Greek crisis. Never went away. And then everybody's favorite topic to talk about in the early 2020s. So they've come down. I need to get a weekly chart set up because I can show you that this is starting. If you look weekly, the total balance sheet of the ECB is flipping. All right, so it is coming up now. So when we look at this next month, you'll see a little blip up, and certainly the months after that. So again, not to cheer on too much money printing and gasoline on the fire for Bitcoin, but right now the balance sheet is down. All right. It was 6.4 trillion here at the peak, 6.4 trillion euros in base money, and now it's way down. 4.3 or so. Let's look at Japan. This is a funny one. From this period, Japan was just dominating. And by the way, you have this nice little bumps. All right, I've talked about this before. You can actually see the cyclicality of cash. Or the seasonality, I should say. This should be around Christmas, right? And it is. Everybody celebrates the solstice in some ways. In China, you'd see it more in the Chinese New Year. It'd be like maybe January, February would be the spike, but here it's December. And everybody needs cash at the end of the year. Pay for the harvest. I know it's not all relevant to Japan, but cash is still growing. All right, in yen, had 4 trillion yen back in the 70s. Now we have 128 trillion in actual cash, falling a little bit here from the peak pandemic time, but still pretty high. Now let's put reserves on. So this is wild. They actually started their decline at the Nikkei top, and they didn't quite figure it out, or they didn't quite do it until the early 2000s. But, Japan was doing quantitative easing well before the US. And look, you can just imagine this was the only thing you knew. It seems like extreme, but to what's coming, it's just incredible, isn't it? They had a bump, of course, during Y2K. Where's Y2K? There. Not so huge, actually, compared to here. No, sorry. Again, I'm too out of it today. Y2K would be here. Big bump, as usual. This was a good time for the newsletter business. This was a great time for the newsletter business. I wasn't, I retroactively read some of the crazies. The fear that went through the alternative media space at this time. They did pump some money in to prep people, but we managed. But the point is, so they started to, bail out the system a little bit here. And it actually went back down relatively. But you could have just imagined, like, if you were only here again, like, it's bad, but it's not terrible. And then you see what they're capable of. It's remarkable, isn't it? So again, this is the printing press. There's nothing else. Nothing else. Everything, all bank deposits, savings deposits, checking account, the source of that liquidity is here. I want to say something about Bitcoin too, because, if you just look at this, it grows. It kind of stinks that it grows. You see inflation, but this is also just a small change problem. It's a decimal problem. It's not necessarily rampant, crazy inflation. Right? You see, it just pops seasonality at every year end. Right? People need to take out more cash for Christmas, or not Christmas. I avoided using the word Christmas for Japan, but the American soldiers in Japan, I guess, were celebrating Christmas, but for the holidays. But a money supply just growing, it doesn't just grow for the sake of growing always, or it doesn't just grow for printing money like mad always. It's small change issues. particularly before the financial crisis. Like in a normal world, anywhere I zoom in here, it's just going to look like that. Doesn't really matter. The scale will change, but it's just more cash is needed. Now, the irregular bumps can point to some wild things like war. Notice you can start to see the seasonality here. It starts to go away. Can you see it here? You can't really see it. Oops. I got to reset this one anyway because of the... So, it's far from scientific. It's far from predictable like Bitcoin. But this is, again, these are the money supplies that compare to Bitcoin. They're two components, cash and the bank reserves. So again, let's look at cash growth for Europe here. Just growth. All right, this is kind of weird. Again, they're sort of like working themselves into the euro. But from here, all right, so it was a little bit fast growth at the beginning, but this is trailing 12-month growth. Not too crazy, and in fact, even lower and lower. Although it is positive as of September. But the reserve growth is where you see the wild swings. All right, this is the digital printing press. You add that to cash growth, and it's just, that's where you get the craziness. So on net, the ECB has not been printing. In native euros, it has not been printing. It's been destroying money, in fact. That's going to change, though, pretty soon. Future or feature? Feature, I presume you mean. Again, I'm not defending the system as usual, just trying to show that they will do it if they can, but it's also, part of it is normal. Let's go back to the US. A lot of what sits behind, why is this not showing up? Something happened on my growth's not showing up for the US. Anyway, doesn't matter. Let's go, say, here. And let's even show the bank reserves, all right? So it's just bank reserves. Much smaller scale, by the way, than cash. Much smaller. Okay? And you actually see some, on the margin, things change a lot, right? We saw during the Great Depression, things change. And then after the Vietnam War here, this is the crash of 87, somewhere here. It's really incredible how little this is, right? But on the margin, it changed a lot of the system. But let's just say here, let's just find a smooth period. It's not like they're doing this just to paper over problems. It's also true that, there's new banks coming online here. Like bank reserves are for banks. It's how banks, it's their base asset. Relatively speaking, when banks have more reserves, they have less bonds or treasuries. When they have less reserves, they probably have more treasuries or more risk. It's kind of how the trade-off works, but none of it is really a defense of the system. It's just to show you the system. I think it's amazing to me that this curve is not seen by the majority of the world. You don't really know what it means. You kind of hear it, and also you can use it incorrectly, right? So everybody said the Fed was printing money here, but it wasn't. It was printing physical dollars, but on balance, the money supply was not going up, right? Again, it went up from 3 terrible QE bailouts of the mortgage-backed security agencies, which bailed out basically Wall Street. in turn. But, Bitcoin pumped here, right here, and the Fed's balance sheet was going down or sideways or down. Now, Europe's was going up. It's true, we should say. All right, so when Bitcoin was pumping here, Europe's was going up, but the Fed's was not. Just want to show you what it is. And then we can try to decide later how it might be for Bitcoin or for everybody else. To their credit, they have taken it back. Of course, the road is too windy, right? It's too crazy. But that's what they do during crises. And then Japan is just the wild one. Just incredible. Like before you thought it could go any higher at, 500 trillion yen. Whoop. It goes up to 600 trillion and change. And down a bit. But the yen is coming down. We'll see. See how long that lasts. So now the growth, all right, for reserves. Let's take off here. Okay, so here's the change in reserves, right? Trailing 12 months. You can see the extremes. It was really 10 years ago when they were printing hardcore. Now, not so much. Doesn't mean that, the inflation hasn't been baked in and could still keep coming. But it's relatively less. Even negative. That is the mechanism, yeah. Yeah, so basically on the other side of this, these are the main liabilities of the central bank. And on the other side is assets. And there's nothing else there. I mean, the Fed has a weird thing with this reverse repo facility, but let's leave that aside for now. Let's look here. So like again here, and the reverse repo facility, by the way, was not starting here. It was more here. So, but for sure here, when you see this, this means that, okay, again, $4 trillion balance sheet for the Fed. These are the liabilities, which they create ex nihilo. They have no restrictions. They can do it by a keystroke or by a print stroke, whatever you call it, just by printing them out. And then they, on the other side of the ledger, is their assets. And so their assets are most always bonds. They have a small percentage of gold. In the US, they even value it lower on purpose to create the illusion that the dollar is like the better asset. But 90+% of their assets are government bonds. And so that's how they print money. So it's literally true that here, when this is going down, how's it going down? Well, they sell the bonds back to the banks, or they just let them run off their balance sheets, combination. But they don't buy any more bonds. And then that act of not replacing the bonds will either, let's say that they sell them back to the banks. Then they would give the banks the bonds. They would take the reserves back that was an asset for the banks, and they literally destroy it. They don't keep it. So that's how the money is created or destroyed. So this is a destruction of money right here, which is important. I think it's important to just at least understand. Again, I'm not defending them. They're far from perfect in what they do, but they don't always print, and they always miss the mark for sure. But Bitcoin was pumping while the Fed was really doing nothing. So the point is Bitcoin could pump here again while the Fed does nothing. The Fed could also do a lot, and Bitcoin could also pump. Good morning, MP. Yes, economic objectives. Yeah, I should get a scorecard printed of this at some point just to see the different things. But I would say these are the main drivers of inflation. Why is this not print? Hold on, I got to fix the dollar reserve. Let's go to the ECB. So the reserve growth, which is primary, this is like the high-powered money. Physical currency is for sure important, but it's like less important because they can't move it around the system as fast as that. You can clearly see that reserves can be created or destroyed much faster. So this would be the high-powered inflation. This is really the inflation rate that I would track. And I'll just show you. I'll jump to the punch. I don't have it, but the weekly chart will show you that the European Central Bank is expanding their balance sheet, like as of last week. Find it. 1 second. Actually, it's not from reserves, but so this is total assets for the ECB, total assets. And you see there's a little bump up. Okay. So we should see some of that reflect here. Anyway, let me fix this dollar number. Why is it not? What are you guys thinking about old Bitcoin? Is it going to recover? It's looking a little bit strong after the 105K low, or a little bit more resilient. Why is this not showing up? One second. There we go. Okay, so let me put the Fed on back with the changes. All right, so take this off just to see it more, and I'll take off. Ooh, that's such a spike here. 2,000%. Obviously, when it was, reserves were like 10 billion or whatever they were, and then so here's the growth of so nothing really compares to GFC still, as far as the actual inflation that came into the system. Although again, it didn't really fully translate into prices because the Fed pays interest on those reserves, which is that's another story. But they go up and down. Here's the change in those reserves, trailing 12-month. All right, so relatively flat. And you add the cash in, it's not too big of a deal. really the reserves that make the overall picture. Yeah, completely agree with that, by the way. Completely agree with that. Yes, it is. What does this mean? I'll check. You're always giving me the good tips, Gio. Okay, so why, if I'm there, why can't I read this stupid thing? Bloomberg is just like the worst, even if you have an account. All right, here's that article. Crypto traders shun altcoins to open $800 billion shortfall. Market caps. Right, this was devastating if you were long alt here. So altcoin market cap be roughly 800 billion higher if retail investors, especially in South Korea, hadn't redirected their attention toward crypto-related stocks and other equities. Okay. Not surprising. Does it give a reason for the 800 billion? Just historically, South Korea loves it, sure. Yeah. Yeah, I can't say I follow him at all. Pretty funny about the just everything about that guy with the he rotates into a idea like, you know, fill in the blank. I don't even know. He's just obviously ever since the Luna thing, he just looks like don't really know what the fuck he's talking about. Musk hijacks Tesla earnings call to vouch for $1 trillion pay plan. He's still going for that package. All right. So let's go back here and just look back in the 30s. Kind of fun, right? Not fun for the people, I'm sure, living then, but this is the first time they really tried to do something. I always think this is funny too because, you know, Milton Friedman famously said that the Fed didn't do enough. And Bernanke agreed with him during the Great Depression, but they did do a lot relative to their short existence, right? You know, here, I guess, would be the big thing. Is if you want to go by specific dates, right? So it's 29 October of 29, and then here reserves are actually going down. That was probably the problem. Again, without saying I study all the ins and outs of every month here, but reserves were falling here relative to where they were. And if you had done the Bernanke style, you would have just exploded the reserves to make sure everybody had coverage over your liabilities. 2,000% year on year. The closest we got then from that was during the pandemic, went to 100% year on year. Right? I don't see the need for this anymore, by the way. It's just too much top of mind. They know that we know that they know, as I said before. I know a lot of people are expecting a crash, but if we do get a crash, it's going to be, maybe something like this, 100% growth. It probably won't be this, though. This was such an enormous change relative to the past, right? Look at the reserves here. Right? So reserves are 40 billion. Then they go up to almost $1 trillion, and they hit $1 trillion by the year later. So that's what I think is in store in case there's something really bad that happens. Yeah, makes sense. Good morning, Matthew. Honestly, I don't. I don't track them. I know that he has this global liquidity. I should probably track it to give you some insight, but if anybody, I can ask Gemini and then pontificate, but I don't have them handy. Gemini has a checkered track record with some of these late, breaking news stuff. Or does this seem right to everybody? Peak around late 2025, although it might come into 2026. I mean, this is a main component of global liquidity, would be the bank cash. Seeing this trend come down is, good, more normalizing. And it is true that all of them have kind of peaked since 5 years ago. But, here we go. I have a hard time seeing this as like, this is the new normal. It's not like this is even going to go back to probably here or somewhere close to that. right? Like a trillion. We're at 3 trillion now in reserves. It's pretty unbelievable, isn't it? If you look at that. Oh, Joker. It's basically risk free. That was your Terra Luna advice. And again, this is a small change issue, but notice how cash is generally trending up. Okay, a little bit here for Japan, down, but it's more and more cash. Euros, yen, dollars. And to be sure, some of that is legitimate. Some of that is small change. Some of that is more people. But if you go back to this chart, you can see 2020, 2021 was certainly the peak, right? Even the total, remember, we were at 20 trillion, then we went up to 30 trillion. And now we're down, but it's not going to stay down too long. But I would go back to the point that Gio made, which I agree is I'm not hoping Bitcoin price goes up because of monetary inflation. I'm hoping it goes up because of adoption. And I actually believe that it is. 90% of the power curve is 90% of Bitcoin's growth is the power curve. It is, it is representing adoption, in my view. Morning, Slanik. Haven't seen you in a while. Good morning. So we're still not as happy as I would like to be as far as, when you get above that trend, it's always fun because then you're pulling it up. We're still pulling the trend down a little bit. All right, but we're not anywhere out of the ordinary. Whether a little bit below trend or a little bit above trend or a little bit below trend. It's crazy to think, though, isn't it? Like if you look at the last, like if you think about all the drama in the markets, you can barely even see it on a daily. Let's take this off and this off. The drama started here, right? Or no? Yeah, it was here. I think it was here. If you sort of back out and just look at it daily, it doesn't look that insane. Probably. Probably. I saw Elizabeth Warren, the conniving, lying politician as she is, saying that he was arrested for money laundering, which of course he wasn't, or admitted to money laundering, which of course he didn't. He admitted to not following proper AML KYC procedures, but that was it. As always, the caveat, not a technical guy, but it would be nice if this was above the 6, right? We've been above the 6 for half a year, longer. Half a year. I wanted to try to find, I need to bookmark these tweets, but there's so many tweets, whether bullish or bearish, which are all trying to do straight lines on Bitcoin on log scale. Oh, this is a great post from Wicked. You guys see this? $5.5 million of the 19.9 million coins have moved at least once at prices above 100K. So that shows you how important 100K is to the price. This is a great chart. I got to get this. I got to get this chart made. This is fantastic. And these are old coins. So here's the bluest would be this, which is 7 to 10 years, which is probably those coins from that were sold on July 4th. As far as I can tell, that's the oldest. I don't see purple. So it's here. And probably some more. But you're getting, in the 7 to 10 year cohort, you had a nice chunk there that was moved at 100K. Also true. I mean, you see what happened here. Oh, this is just the, wait. I'm sorry. I read that wrong. This was all the coins above 100K, which actually seems weird to me because there was definitely on July 4th over 100K coins that were over 10 years old. I don't necessarily see that here. Maybe it's just too small to show up. Not quite sure. The lightest here is like this yellow, which seems to only be maybe here, 1 to 2 years. It's a good chart, but I'll try to try to make this as well because this is pretty interesting. A lot. Yeah, interesting. So over 100K, which has not been so long. I mean, we've been over 100K really just from here since after the election. So in only this period, right? Really only in this period, we've had 5 million coins move, which it shows here. But this is still slightly confusing to me because this seems like too young to be the oldest cohort. This is like one of these yellows, which again is maybe 6 months to a year or a year to 2 years. But we definitely had older coins move than that, unless they're so small that they're rounding, which I guess is possible. Anyway. Yeah, I'm with you. I'm not ruling it out. We've been to the 8. Sorry, we've been to the 7. Have we been to the 8? We haven't been to the 8. We haven't been to the 9. And just because we haven't been, why rule out prior tops when we have been, or prior cycles? So the question will be answered very soon. I know everybody has the question. I have it too. It will be answered. I'm kind of thinking we do it. At least the 8. At least the 8. 1.3x the trend, which is 170, 167 by year end. Interesting. I guess this is a UTXO thing, right? So it shouldn't be that hard still. Even if you snapshot UTXOs only daily, you should tell if, those 80,000 coins or whatever, which were 14 years old, moved. And even 80,000 coins should show up on this top level, like here, because this is 500,000 coins. So like 100,000 moved. It should be like here at least is purple. So I don't understand. Like at least here you should have a purple block. But a lot of yeah, it's kind of weird actually now that I look at this more. Where's that tweet? Hold on. This is the distribution. So this is the last time those coins moved. Yeah, I can't make sense of it. You could be right, Daniel. It could be closer to 10. Yeah, but it's interesting. And I still think, as we've talked about, say 2 to 9, even 1 seems uh, too rare. Getting to the 1. So let's take off the 1. You could even say 9 is too rare, but let's leave it because it's fun. So I think if you go to the next cycle even, I think these are our chances to be between 848,000 at least once, and then back down to 190,000, which of course is higher, but we're gonna have a fall lower than that. Obviously, if the 4-year cycle holds and it happens at the end of next year, then 80,000 we could hit that. I don't know the answer to that. The good thing about some of this is, America is terrible with retail like they try to protect. It's in the name of protection, but obviously they just ban retail. And at least in Europe and other countries, that's not happening. Although I saw the news, do you guys see that France is going to follow in the U.S.'s footsteps of taxing you if you leave? Right? So even if you become a resident of another country as a Frenchman or French woman, I think it said if your tax bill is, which again seems like a nightmare when you put a threshold like this, but if your tax bill is more than 40% lower, you should pay 40% less taxes than you would have in France, you owe to France. Seems like a complicated threshold, but that's what they did. Yeah. Yes, it is. Wait till this stuff starts picking up, right? Also, like I said before, Bitcoin could go up when some things are sideways, like it did here. But Bitcoin can also go up when the money printer is running hot, like it did here. So, both happened, right? Bitcoin screamed to an all-time high here when the Fed was actually coming down, when it was destroying a little money, but it also went to an all-time high here. And now we're flat again. We could still go to an all-time high with a flat money supply. So maybe it's a bit too much of a bullish take, but yeah. I need to get the actual volatility in a chart. I don't think I have it. Let me check. Let me see. One second. Okay, so I do have it. I do have it. Here it is. Here's the price. Price into a power curve. Here's the vol. And the vol is also a power curve. So it's coming down. Used to be on a curve 20% per day. This is daily vol. And now we're 2%, and the curve itself is higher in both cases. But let's just look at the trend. So yeah, it's coming way down. But price is still going up. This is bullish. I'm sure there have been some analysts that have projected the tops based on the vol. Maybe. It seems like if it was if we had a top in 2013 at 8%, no, sorry, 12% vol, then we had a top in 2017 at 7, then 2021 at 5. What's that vol going to be when we top this time? Well, I don't think it will work in 100 years. I think it turns into something else. Either it goes exponential, or the rest of the world turns power, and we have different debt structures. Because you can't do debt with the power curve. So I'll show you again, or not again, but if you haven't seen this, I've added to it. So you're correct that, if exponential curves are going straight up on log, but power sort of gradual, then it could pass once on the way up, then on the way down. But I just think that's too philosophical. Obviously, it wouldn't make sense to sort of do that. But if Bitcoin is the asset that we all think it can be, then it either it turns exponential like everything else, or everything goes into a power curve. At least that's my thesis at the moment. So everybody's seen this chart, but here's an exponential trend shoehorned into the Bitcoin price. It's clearly not doing this. By the way, I've seen analysts use this, like people that don't understand that it's not going on a straight line on log, and then start to do oh, it's still in a bull, and do a straight line here. It's not, you don't need multiple straight lines. You just need the power curve to show how it grows. But anyway, to answer your question, I think it's possible. If we just follow the power trend growth, say by the end of 2025, which is 40% per year, we get this, which is not that crazy, right? So what that's doing is you're just, you're going from power, but then say we shift into exponential. It's possible we do that. Or maybe this happens in 2035, and then it's even more gradual, right? Because the curve itself will be lower. The power curve will be lower at the time. So these things could be possible. But I actually think this is a bad scenario, because this is just mirroring all the other fiat junk and interest, and we want it to do more than that. So I think it's good for, if you have it, constant growth is better than power growth. But this still presumes the booms and the busts, in my opinion. But notice, by the way, how the the valuations are much more reasonable than a power exponential trend, which Plan B still says that we're on, even though his curves are power curves on stock to flow. So, you know, 1,000 million, billion, trillion, $2.3 trillion Bitcoin. If Bitcoin was on a real exponential trend, which it's not, versus, 70 million, 10 million, all sound more reasonable. Yeah, it's just so, everything grows like this, right? This is why you see analysts trying to draw straight lines on Bitcoin's log scale, but it doesn't make sense. So everything in the real world grows like this. In the financial TradFi world, it grows like a straight line log scale. But Bitcoin doesn't. We clearly see it doesn't. It's sustainable. So it's weird because the weird thing is Bitcoin. Nothing else in the TradFi world grows like this. But the problem is with fiat interests, you cannot have, at least over the long run, you can't have fiat compounding interest with a power curve. Power curve slows down. But interest stays constant. It makes everything grow geometrically, which is this line. So something will have to break. It goes back to the point that you said, Slanik, which is absolutely true, that if Bitcoin passes all this stuff in the next 10, 20 years, like debt and gold and monetary base, eventually, like after 100 years, it will go back because it curves. It's just geometry. But obviously, philosophically, that doesn't make sense. So one of two things has to happen. Either Bitcoin goes exponential like this, right? So the power stops, and then we move on these straight lines, albeit a lower slope than this slope is this is all-time data, but it's obviously Bitcoin doesn't fit this, right? We haven't hit this price since 2022, and we're not going to hit it again. It's 500,000 off and growing. So, just to repeat myself, Bitcoin either goes like this, the dotted lines, or it continues in power. But if it continues in power, you can't do fiat interest. It's just too much interest. And then you get to these arguments of like, we're not going to have debt, or we're going to have equity agreements or whatever. Right. So the S-curve of technological adoption typically happens for like products, but it doesn't really happen for protocols or networks. Let me show you. So I think this is interesting. I've shown this before, I think, but so here's all the ones. Like the clear S curve is like the TV. It's like first 20 years, barely anybody's unit, then it explodes, then it levels out. But this is sort of penetration in the US, right? And the internet is on here, but except for the internet, everything else is a product. So if it's going to go up and explode and then level out, that's fine. But look at the internet, by the way. It's not a clear S curve. They're trying to say it's an S curve for like a few months. It's possible that the internet is a straight on power curve, like it goes up and then over, up and over. We're just going to have to see. Right? Bitcoin just goes up and over. Yeah, that's my theory. And I think Giovanni has the same theory. It's just what you see here is adoption. It's just adoption. And you can see it with hash rate and addresses. It's the same curve. So it's not only in price, but price is the best signal, as we know. Is this a GPT response? There's no guarantee that it would look like this. And for products, they need to be brought to market by companies. I guess the one here, electricity, is arguably not a product. So people like the S-curve idea because they think, oh, well, this isn't even like the fastest part of it. Like, but it's still, it's just not an S-curve, because an S-curve would mean like this part of the curve is flatter and then we go up. And so a lot of people draw that curve like you've seen on Twitter where it's like flat and then we go exponentially up and then flat again to get that S. I don't think that's right. It's just power. It's just a power growth, which again just means proportional growth. So as it gets bigger, it takes longer. That's all it means. As it gets bigger, it takes longer. Whereas if it was exponential growth, doesn't matter the size, doesn't matter the age. I mean, the rate could change based on the the asset, but this is obviously, look at the price, how it doesn't perfectly fit this curve, but whatever the growth rate is here, and I actually don't have it, it's a huge rate. I don't know what it is. Like, it's probably over 100%. I don't know what it is. But any point on the curve, it's the same doubling time. Doesn't matter where you go. That's exponential. Big power curves have scale invariance, so they slow down the bigger that you are. The bigger that you are, it slows down. It doesn't. There's no explosion coming here. It's just slowing down. Still super fast, right? We're at 42% per year right now. It's doubling every 2 years, but soon it will double every 3 years, then every 4 years. That's just what a power curve over time shows. And there's no financial asset that works like this. Not one. I'll leave it with that. Listen, guys, I'm sorry. I'm still on super jet lag, and I got a podcast later and some other stuff to do. So I'm going to have to cut it here. But thank you for watching, as always. Thank you very much. Check out my website if you want to see more, how things are charted, quoted. Feel free to send me some sats. Value for value, no subscriptions. You can find the charts here on the power curve. To close it out, where I started, massive amounts of newsletters sold you fear during Y2K, which you can see here, and then here. This stuff can go on a lot longer than the newsletter crazies can write. So let's enjoy Bitcoin, focus on your family, and talk to you next week. Thank you, Slonic. Thank you, Daniel. As always, guys. Appreciate it. Thank you, Jeblet. Have a good night in Australia. All right. See you guys.